is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
I've listened to you for years. You got a great thing. I've been listening to you for over a decade. It's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Expect to have hope rekindled. Expect your prayers to be answered in wondrous ways. Get your stops in. That's the real bottom line, folks. Market-wise, let's take a look at it out here. Dow Industrial's up 56, Nasdaq's up 29, S&Ps are up by 8.5. Gold contract down $1.30, trading at $1,123 an ounce. Silver up 33 cents, trading at $14.41 an ounce. Platinum up 15 at $9.98 an ounce. Copper up 8.5 pennies at $2.32 a pound. Light sweet crude up $3.51 at $42.11 a barrel. Bonds, you have the 10-year flat, 127.30. 30-year up 21 at 156.22. 30-year bond, folks, was basically dictating out here once again that this market wasn't going to hold. Bottom line, had a rejected lower price, had lighter volume, went positive. That was by 11:30 this morning, by the way. King dollar up 509 ticks, trading out at 95.64. The euro down 48 at a 112, and the yen up 71 at 120.63. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We take a look at the SPY. What you're going to see out here, folks, is that you're going to see we got to a price point today of $199.41. You're at $195 right now, 98. You got over the downdraft that was created out here in the 24th. That high there was 197.47. Bottom line, we're going to do 191 million versus 507. You have two different things happening here. Number one, you're going to go after the lows. Number two, is it an ABC structure on the way down? This bounce is over, folks. If you get my newsletter, you know, intraday, actually, we had two longs from yesterday. I closed those, and I flipped the position at about, 12:30 this afternoon. Bottom line, so that's your SPYs. We go into the Qs. What do you have with the Qs? This is what you have with the Qs. Qs got to a price point of 105.71. We're at 103.84. You have volume of 47 million. The correlation out here with the 47 million, you're going into 97 million as well as 150 million. Bottom line, this bounce, nice bounce. Huge bounce, just over. Gold contract. What do we have with gold? This is what we have with gold. Gold contract out here got into a price point of 11.17. You're at 11.22 right now. We had dramatically lighter volume, which was pretty cool because that's what we needed. You know, gold had come down yesterday, and when it came down, we came down yesterday with 207,000 contracts. We tested that low out here today with 133,000. Now you need a sign of strength. Silver. Let's go take a look at the silver contract. The silver contract is what they had taken apart in an extraordinary way. Now, it's up 34 cents. The silver still has to get back inside like 1451. It's not back inside that area yet. It has to get back inside that area to talk, walk, and squawk. Now, let's look at the bond market. The bond market's a trip, folks. It just blows my mind, the amount of information that it continues to give out on a consistent basis. So if we take a look at the 10-year first, this is what you have. 10-year got down to a price point of 127.18. We've done 2.1 million contracts. What the bond market had done is this. The bond market came down hard yesterday, man. And it didn't go to a swing point. In fact, we still haven't got to a swing point. But what we did today, which it had to do in order to get to higher price, is this. It got under the lows of yesterday. The low of yesterday was 127.25. We get down to 127.18. We're rejected. We're inside it once again. That's saying, guess what? That bonds are going to go topside once again. We go take a look at the 30-year. The 30-year had given actually the best information. And what the 30-year has done is that the 30-year normally leads the 10-year. 30-year, what we did is this. We've done 433,000 contracts. We're trading at 156.19. And bottom line, we'll see how this shakes out tomorrow. But we tested that low. We did it with lighter volume. And what that says is that higher prices are coming at us. King Dollar. Let's go take a look at King Dollar. What do we have with King Dollar? King Dollar, the way King Dollar is set up, King Dollar did 51,000 contracts out here today, up 519 ticks. She got into the 61,000 level at 95.80. Now, King Dollar failed. King Dollar went to 96.06. We've done 51,000 contracts versus 61. King Dollar has to close over 95.80 in order to basically get the higher price. That is saying King Dollar also is going back down into this 92 area. And what I expect you're going to see out here, which is really a trip, is 85. Because the way that we took the June 18th swing point out at the lows, folks, was extraordinary. Big time. Now, what do we got? We got 45 minutes into the close. So this is what we've had out here, if you haven't been in front of a machine. The high of the Dow today, 16,666. We're at 16,388 right now. I suspect as we're coming into this close, we'll probably have a flat close, which is just insane, okay? Bottom line, that's what it looks like. We take a look at the SPY. What you have with the SPY is this. Well, actually, yeah. So we go to the SPY. What you have with the SPY, SPY had been up to 199. You're at 196.19. And if we look at this intraday, what you're going to see is this. Intraday, you're going to see how hard you came down. And, you're talking about the last 10-minute bar, right when I got on the air at 3 o'clock. That bar, folks, okay, at 195.21, which was the low of today, is a high-volume low. It's going to go after that low before we going into the close. I mean, it's a disaster. That's the bottom line. Some of the Dow stocks, what do we have? IBM's down 56, and if you want to see just this market is so sick, it's pretty insane. So IBM, the high today was 148. It's at 146 right now. If you want a number, now I got to check on this. And I'm going to check on this number tonight. But when I had to go to a meeting. I was in my car for a bit, and I heard Bob Pisani on CNBC, and he was claiming that the ARMS index was the lowest that Dick Arms had ever seen it since 2000. Since he basically made it in 1969. He said it's a 0.027. Now, if that's a fact, I have no reason not to believe him. Here, I'll walk you through that when we get back as to what specifically that means. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We get the Dow up 150, Nasdaq up 53, S&Ps are up 20. We were talking about Dick Arms and his Arms Index. Okay, so what Pisani was saying is that that Dick Arms had said he had never seen that Arms Index that low, which is a 0.072. So if, in fact, that's the case, and I'll look at this thing tonight, what this means specifically is this, folks. So watch the way the Arms Index works is this. When, let's say, all the stocks in the NYSE are getting the same amount of buying or selling, the Arms would be 1, okay? When the Arms goes up dramatically, meaning that when we hit the lows in 2008, the Arms was a 9, okay, in one day, right? Today, the Arms, they're saying it's a 0.027. Now, with that means that it's like insane. But what it also means is this. This is how this works. If you can wrap your head around this, it's pretty cool how this works. It means that out of all the stocks in the NYSE, everyone was buying the exact same stock, okay? And once you're in, and that's it. You know, when I heard that, I says, oh, my God, this is going to be really intriguing, not even seeing what's happening today, what's happening tomorrow. Because when you get a large one, like we had a 9, you're going to get a bounce in the marketplace and you're going to go up. When you get a small one like this, you're going south, man. That's the bottom line. Now, folks, let's go over to our man, Mr. Andy Heck. Man, Mr. Andy Heck has a great show right after me every Tuesday, Thursday. Get it right on your cell phone, tfnn.mobi. If you like to get, that's full audio. You want to get audio and video, just go to tfnn.com, hit the little box on the right-hand side. Our servers know exactly what type of device you're on. Andy also has a great newsletter. It's the Technomento Commodity Report, and the way you get it is this. Come over to our website at TFNN, and you go to the top, you'll see newsletters. You hit newsletters, hit trading newsletters, you see the Technomento Commodity Report right there. Outstanding newsletter. Bottom line is that, you know, commodities, folks, are in the futures market, right? But guess what? There's so many ETF structures. Andy covers those ETF structures. So if you're an equity trader, great newsletter. Test it out. You'll love it. Andy Heck, what's going on?
Hey, Tom, you know, I'm listening to what you're saying about ARMS, the Arms Index, and I got to tell you, it sounds like a Roach Motel, what that reading is. In other words, they're all buying the same stocks, and when it comes time to get out, it's a very narrow window.
And, well, what happens, what's so cool about the ARMS is this. I only use this, folks, okay, at extremes, okay? You know, I haven't even looked at it for a long time. But at extremes, it's really cool because what it does at extremes is this. Extreme up or extreme down. What it does it shows very quickly what is being bought. And so in this particular case, it shows that, okay, everyone's buying the same stock. Well, just on a common sense type of deal, once everyone got sucked into the same stock, guess what? Who are they going to sell it to?
Right.
That's the truth.
Right. They're all buying Apple or whatever they're buying. You know what I mean?
Exactly.
Right. It makes sense, and it's the fund managers. They're all trading against the indexes. Huge. This crazy volatility we've seen this week means big sums of capital are just shifting hands. It's amazing. It's amazing. So commodities, my bailiwick, insanity, man, craziness. So listen, the first thing I want to say is everyone out there, tomorrow, you got to keep your eyes on oil, because if oil can manage to close above 42.90 tomorrow, which I heavily doubt, but if it can, that's a key reversal, technical key reversal on the weekly chart.
How cool would that be, right? Yeah.
That could be very interesting. I mean, that will say 37.75 was a bottom. We can't listen. All this production, what's going on in oil, it looks ugly. But we can't forget that in March, when it looked just as ugly at $42, it rallied for 9 straight weeks and rallied 50%.
I know, which is awesome. No, it's a great opportunity, man. No, listen, man. Hey, listen, man. I'm still, I love this. What happened out here today in oil, man. Do you know what I mean? Because when you're trading, these are good deals, man. And nothing goes up forever, nothing goes down forever. That's my take on it anyway.
Absolutely right. Nothing goes in a straight line. Wouldn't be any fun if it did.
Right.
Hey, another interesting thing today in the gold market.
Yeah.
You got divergences all over the place in all these markets. So today, what do we have? We have the GDX is up 4%, something like that. Right, and you got gold down. So you got divergence going on there. Very interesting. You got silver up, but yesterday silver got absolutely smashed.
They took that apart, man.
Down to 13.
Serious business, man.
It was an option expiration day.
Right.
And hey, that's like 7-year lows in silver. That was an insane move. So we got a lot of craziness.
And hey, folks, when we talk about silver, yesterday, folks, Andy, I had Chris Gaffney on, right? From Everbank, and he came up. I mean, the bottom line is that Everbank folks want you to be diverse, inside your portfolio. They have some 100-ounce bars right now of silver. They sell them 50 cents over spot, per ounce. And then they're selling the Eagles only 35. The gold Eagles only, not Eagles, Maple Leafs only $35 over. So if you're looking to get some diversity, folks, okay, you can give Everbank a call. It's 855-750-4051. 855-750-4051. Those are good prices, man.
Absolutely. On a premium basis, those are good prices.
Yeah.
I'm a big advocate of owning physical here on a scaled down basis.
Well, what's nice about it is that you just put it away and say, okay, it's a good insurance policy. That's the bottom line.
No question about it. But these divergences continue to bother me. We got the gold silver ratio up at 77.5 to 1. We got the platinum gold spread at $124. That's still weighing on me. We'll have to see what happens. We'll have to see how this shakes out. I think 1110 is a very important level of support for gold. I don't want to see gold go below 1110 if I'm long here. Absolutely. I mean, that's kind of important to me. On the upside, 1135. We've been just trading around that thing. That is an important resistance. So with tomorrow, Crazy Friday coming up,
I know, man,
could be interesting. Listen, we had a question in the den about copper.
Yeah,
and let's talk a little bit about the copper market, because we got a nice 8.5 cent rally here today. Not a surprise. I mean, look, we got down to 220.
Right.
They've been pushing this thing, and could it rally from here? It could. But I think the caller was asking about. Let me take a look. TGB, Tasco.
Taseko.
Taseko, right? Taseko, right? And that's, to me, I don't know what you think about it, Tom, but to me, that's like a penny stock. If I'm looking at copper here, I'd rather be in with the big guy. I'd rather be in with Southern Copper.
SCCO, right?
Exactly.
Southern Copper.
You know why? Because at 85 cents a pound, they still produced, they still made money. They got so much production around the world. And what a company, what you got to understand about commodity producers is that the really strong ones, when they adjust their production to price. So when the price drops, they go after higher grade ore, lower production cost ore. When the price goes up, they go after lower grade ore, higher production cost ores. So they adjust. I want to be with someone who's going to be there. I think there's going to be a lot of companies in this commodity space disappearing. I still think copper is going to go to $2 at some point. It's going to be a wild ride. I mean, could it go to $2.50 first? Absolutely. Yeah. But you know what's going on in China? Just because the markets are up, folks, today doesn't mean that China is cured. I read a very interesting article this morning that said, Tom, that they have some kind of military parade in China, and the government decided that they were going to boost the stock market so everybody was happy.
Yeah, totally, man.
That's crazy.
That's beautiful. Well, let's talk about that, right?
Okay.
You stay right there. And Taseko, we'll talk about Taseko. You have to play on Taseko, Andy. That's why people like it. They've been in it for like 20 years. They have a big mine that they're never going to get opened, and it's a gold mine. That's what's going on there. But you stay right there, folks. Andy and I are coming right back. Dow's up buck 20, Nasdaq's up 47, S&P's up 17.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is up 209, Nasdaq's up 72, S&Ps are up 26, and you can just expect this volatility to continue right into the close, baby. Okay, so Andy, what were we just talking about there?
We were talking about, we've wrapped up something about copper, but let's move on. Let's talk about, let's talk about the dollar for a minute.
Okay, cool.
Let's talk about the dollar. I know, I heard you in the segment before I came on. You're looking for lower. I'm looking for higher.
Right.
I think that fundamentally, again, for me, it's all about fundamentals. Whether the Fed raises interest rates or if the Fed raises interest rates, at their September meeting, I think the dollar blasts off. That's number one. I don't think they'll do it. I don't think they can do it with China. I think they're going to have to wait till October or December. I think it just gets the can kicked down the road. Right. That Europe is pouring billions down Greece's throat. Europe is fundamentally weak. The euro at 112, maybe it could go to 115. I think it's more likely to go down and test the lows again. I agree with everything you said.
Where the dollar selling is coming from is China. That's what it. So picture you get a supply and a demand curve, right? China probably has more dollars than the whole rest of the world. In order for them not to have the yuan crash, as the yuan is going lower, they have to sell dollars. Because if they don't sell the dollars, then the yuan will crash. They're trying to go delta neutral as much as they can without the yuan crashing.
Yes, Tom, but they also have other currencies. They also have lots of euros.
Oh, they do.
And lots of other currencies, and they're selling those too. They're selling them all.
Oh no doubt. So, are you there?
Yeah, I'm here.
Oh.
I'm here. I was letting you finish. You said no, so I was going to.
No, I said no doubt. No. Listen. Right. The dollar will be the strongest currency, the strongest fiat currency, but they're all going to be lower.
Right. That's exactly right. So to me, the dollar index is a basket. It's 57% euro?
Yes.
You got, the kroner in there. You got some Aussie dollars in there, some yen in there. You got some Canadian dollar in there. Kind of like a little bit of a currency soup. So to me, the dollar index, I listen. We have a nice day in commodities today. Everything looks beautiful. It's this is a bear market rally in commodities. There's no question in my mind. Even if oil does a key reversal and runs back to 50, we're still going to take a look down, lower again. This production war is too much, and as oil goes, the rest of the commodity market is going to go. So, from my perspective, the dollar in general should I think it'll test over 100 again. We'll have to see how it shakes out. We'll just have to see how it shakes out. But I totally agree with you that the dollar is the best looking horse in the glue factory, the best looking girl in the class. That is for sure. But it still is the best looking one. So that's the only reason I like it here. If we move on to something else, natural gas. So
let's do that. I was talking with Dave from Clearwater yesterday. So that came out here. Let's do that right now. Cool, man.
Right. Yeah, natural gas. The stocks came out today. Nothing special here. Increase of 69 billion cubic feet. We're up to just under 3.1 trillion cubic feet. It's about 18.3% below last year. And by the way, we were like 50% below last year. We've been coming down, but these stocks, everything's filling up here for winter. The thing I like about natural gas, Tom, there's two overriding things. One, coal is dead. Long live natural gas. And that means that, electricity is going to be powered more and more by natural gas. That's more demand. The second thing I like, whether it's Cheniere or someone else, liquefaction of natural gas and export of U.S. natural gas will increase demand. These are long-term things.
Sure.
But short-term, as I pointed out, I think it was last week, out of 12 of the last 15 years, natural gas rallied from its price in August in September and October.
Ooh, cool.
And that's why I really like this pattern. And by the way, one of those years that it didn't rally was when it was coming down from $13.50 after one of those crazy hurricanes that hit Louisiana.
Yep. Well,
so,
I'd love
really,
to see
that 80%. I think we got up to 350. Easy.
No, and I'd love to see this low get tested again today. See, so what happens, folks, is that we got to 264 today. It was testing 264 and, 117,000 contracts. So I'd like to see that tested one more time because that's too many contracts in correlation to how that low was established on Monday. Today's Thursday, right? Yeah, today's Thursday. Right.
All day.
All day. It's a beautiful thing, man.
Here's another really interesting little factoid for you. On On June 19th, natural gas was, let's see what the price was. It was around $2.80.
Okay.
Nothing special. 20 cents higher.
Yeah.
The open interest was 1,050,000 contracts.
Okay.
Today, open interest is 925,000 contracts. That when prices go lower and open interest and volume decrease, it's not a bearish signal for a market.
Cool.
It means that interest is contracting, especially open. I'm a big fan of open interest because it tells you, are people playing or are they not playing?
Right.
People leaving it alone. Listen, also, historically, you put up like a quarterly chart of natural gas. I can't get it right now. You'd see, look at how many times it's below $3. It is, a cheap price. Look, you put up a quarterly chart of oil here. Hey, before 2005, $42.56 was like all-time highs in oil.
Yes, exactly.
Right? Natural gas below $3 is cheap, and the lower it goes, the more uneconomic it becomes. So all of this problem in the oil patch and the less production and the less number of rigs, we're down 900 rigs or so in the last year. That means less natural gas. So you have a little bit less on the, supply side. Listen, there's still a lot of supplies around, but you have two really important things on the demand side. And you have a nice technical setup, and you have an 80% kind of confidence level that over the last 15 years, this thing has rallied in September and October.
Yeah.
So
now I just put up a quarterly chart for you, going all the way back to 1990 in this market.
In natural gas?
Yeah. Yeah.
Yeah. Look at how many times. Just put the line at $3.
No, I know.
I mean, come on. It's like it is cheap. It's cheap on a historical basis. So that tells me, hey, it sets up a very nice low risk, high reward potential. Right. And who knows what the weather's going to be this year? Who knows what craziness lies ahead in terms of, frosts? Hey, September is next week.
Yeah,
right?
and
summer's over. Didn't that go fast?
Those hurricanes are always dangerous. I mean, we've been really lucky, thank God, knock on wood, like a million times.
Oh, absolutely. But now we're going to have to focus on cold. And the winter, hey, will it be cold? Eventually it'll be cold. Not where you are or where I am, but where many of our listeners are in Boston, New York, and places like that. Yeah. It does get cold, and that's the peak of demand season. So I like this as a low-risk, high-reward play. Natural gas to me is one of the things that sticks out in the market and looks attractive here.
And of course, you can trade that in your commodity reports with ETF structures, right?
Yeah. Absolutely. I mean, you got stuff like, you could trade the upside in natural gas, like leverage through UGAS. Sure. You could trade the downside through DGAS. There's so many different choices these days.
It's a beautiful thing, brother.
It is.
We're looking forward to your show. This is the first hour. The market's still open. So an hour and 20 minutes, folks, right here at TFNN. I'm Mr. Andy Heck, TFNN.MLBI. Thanks so much, man. Look forward to the show.
See you later.
You stay right there, folks. We're coming right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured.
These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 221. Nasdaq's up 74. S&Ps are up 19. And you talk about volatility, folks. You got it in spades out here. When we look at the E-minis, okay, if you want to see from top to bottom, back up to about halfway, the trading range out here today, it's about as wild as you get. So check it out. So, you know, we started out here at, let's see, we started out at the 1951 area. We go up to, 1951. You go to 1986. You snap back down to 1934. Now we're at 1967. Gotta love it. Let's go to, I think we got, I'm sorry, one second. There we go. Tom in Ohio. Hey, Tom, what's going on?
How you doing, Tom?
I'm doing great, man. How you been?
All right, working and staying busy, getting ready for a road trip.
That's awesome, man. Cool. What are we going to look at today?
We're looking at Arch Coal.
Arch Coal. Okay, so let's take a look.
Sure.
So the low on this that was established on August 5th with 99 cents. The high is 32, which was established a year ago on August 27th. This equity is up $1.77 today. Okay, so it looks like let me pull this back.
They did a 10-for-1 split, reverse split.
Okay.
And then there's news about Soros getting in it. Okay.
Yeah.
And it got above the 50-day, daily 50-day, and it held it. So I went ahead and got a little position.
Okay.
I wish it would have been a little bit bigger now, but and it's got the volume. It's gotten some volume in it.
Yeah, it does. It does.
Just seeing what your opinion is on.
So watch this, folks. This is really cool to understand. You know, I knew that the whole big rumor is George Soros get in it, okay? So when he was getting in it, right, bottom line, folks, he owns all of 55,000 shares. Yeah. You want to see it? I mean, this is like a joke. So we put this up. When you're going to see this.
It was all over the news. Boy.
It was definitely all over the news. But here it is right here. I'll show it to you. Soros, where are you? Let me see this. Put it right there.
But
there he is right there. 55,320 shares. That's out of 140, 21 million shares. You know, now, okay, so now that being said and done, though, you know, bottom line is that, hey, this says strength off the bottom. That's, you know, that's the bottom line. Let me bring this back further and see what you, now this is what also does happen. This is what you got to wrap your head around. Don't stay to this party a huge, long time, and this is why, okay? Well, you can if, in fact, it takes out the first swing point up here is 1150. I've seen this before where you get huge surge in the way up, right? And you don't take out a swing point, and then the companies go bankrupt. So this has to take out a swing point. You know, you have the two accelerations, you know, off the bottom, but your first swing point up here is 1150. You know, so
yeah, that's what I thought resistance was about 11.
Yeah, it's just it's crucial. Hey, if it takes it out, you're in great shape, man. That's the bottom line.
All right. Well, I appreciate it, Tom.
Okay, man. Have a great one. Have a safe one. Let's go take a look at this market. You got to love this, folks. This is just amazing, actually. Dow Industrials are up $300 right now, 313. The high of the day out here in the Dow was 666, and you're only we're only 70 points away from it. That is after basically when we started the program, we were down into the price point of, you gotta love this, down into the price point of 323. So what does that say in the context of where we are? Bottom line, folks, might call that the top is in, the bounce is over, and what you'll see is that you're going to see us backing down out here tomorrow. Why? Because what you have is this, is that we're at 917 million on the NYSE. That's not even close. You're going into billions. On the NASDAQ, you're at 2 billion. You're going into the 2.6. You're going into 3.4 billion. On the SPYs, if we take a look at the SPYs, this is what you have. SPYs right now are doing 236 million. That is going into 507. What is going to be interesting in the SPYs is this. The close over 197.47 would be saying that, yeah, you can go higher. You know, so that's going to close over that area. I mean, you know, we got over that area. It doesn't have the volume, but in order to fail a test, it would have to close under that area. The Qs, we take a look at the Qs. What you have with the Qs is this. The Qs right now are at 105.04. Bottom line, the Qs don't have anything. The Qs have done 58 million shares. That 58 million is going into 97 million. The IWM, the small caps out here, we take a look at the small caps. Small caps are the weakest again. Small caps up $1.62. 44 million shares, and the small caps did fail. What the small caps managed to do is that they got over the downdraft that was created on August 24th. The high of that downdraft is 114.91. We got to 115.12. You're going to close underneath it. Small caps are going to basically lead once again on the way down. So this is going to be wild watching this shakeout, particularly watching this shakeout on a Friday. Okay, we're going to be committed to a Friday. The question is, who wants to hold over the weekend? You know, all the press, of course, are saying that this is the largest two-day point move that the Dow ever had. Always be careful of that, folks, as to what the point move is versus what the percentage move is, okay? Bottom line is that I remember so specifically in the 2007-2008 debacle on the way down, you went down fast, furious, and then I remember coming in, and the Dow was up 900 points. Bottom line, that was a beautiful thing. And what did happen there when the Dow was up 900 points that day is that the tick readings went off the charts on the way down. Some of the high volume stocks in a market that's going to be a low volume market, this is where it's at. Netflix is up $7. You got Facebook up 2. Apple's up 2. You got Freeport-McMoRan up 2.27. Schlumberger is up 3. You got Cameron up 2.7. Some of the Dow stocks out here, this is what you have. You have Honeywell up $1.90. IBM's up 134. Caterpillar's up 164. What a difference 60 minutes or 120 minutes makes. There's no two ways about that. Walmart's up $1.10. You get Caterpillar up 159. Boeing's up 204. If we go over and we take a look at Big Blue, we take a look at IBM. What you're going to see with IBM, up 136. 4 million shares. You're going against 7 million shares, and you're going against 10 million shares. Bottom line, zero juice inside that market. Boeing, we go take a look at Boeing. What do we have with Boeing? Same setup. Boeing is up with 5 million shares. Downtown with 9.4 million. If we take a look at the NYA, which is the composite, what you have inside the composite is this. The New York composite had a high out here today of 248. You're at 163 right now. That's off the highs, of course, when this thing started of 819. So that is a monster move on the way down that hasn't even got close to coming back into any type of retracement. This is Tom O'Brien. This is TFNN. Guess what, folks? We have 10 minutes left in the marketplace, and stay tuned, because guess what? Ride 'em, cowboy! Dow is up 301, Nasdaq's up 94, S&Ps are up 31, gold is down 130. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow Industrials right now are up 300. NASDAQ is up 96. S&Ps are up 38. And swings, man, we get swings in an extraordinary way. The characteristics out here, if we go take a look at, let's go right over first. We're going to take a look at a couple of these gold stocks. If we go to Rheingold Resources, folks, Rheingold right now is trading up 172. You're at 60.48. Now, you know, bottom line is that you got some action here, but we need wider price spread and more volume. You know, Rheingold today went up 915,000 shares. You need about 1.1, 1.3 million. Franco-Nevada, we take a look at FNV. What you have with Franco-Nevada, that's trading at 42.11. Now, Franco-Nevada, different ball game. You know, nice setup here. What's cool about Franco-Nevada is this. Franco-Nevada, it is the best royalty stock out there, as far as I'm concerned. What it does do is this. It gives you a decent prior heads up, as to where the price of gold may be going. because what happens is that they just make money on the royalty inside the miners. They're like a bank. They only have 26 employees, and bottom line is that with 26 employees, they take in $437 million a year. So it's pretty extensive what a Franco-Nevada does in the marketplace. We go take a look at Gold Corp. Gold Corp out here. Gold Corp is trading out at a price point of $13.61, and Gold Corp. It doesn't have that much volume, but I like the setup, actually. The setup's pretty good. What Gold Corp had done is this. Why should we put this on a a daily basis? What Gold Corp had done, when it came down yesterday, it came down with 15 million shares. It was testing the lows that were established out here on the 24th of July, which had 21 million. Now, Gold Corp also is going to need more volume as this gets into higher price. But because of the context of how you tested the lows versus the highs, that's a pretty good setup. Dow Industrials, okay, you got to see this, man. This is about as intense as I don't know if I've ever seen, but so Dow high to low out here today, folks, and back to highs. This is how it went. This is how it went just since I've been on the air. So the high of today is 16,666. When I got on the air, that's where it was, okay? Bottom line, it goes down to 16,323. Was 323. That's 300 down, right? Now it's 300 back up. So it's right at the highs once again. You're at all of 30 cents off the highs. If we take a look at the SPYs, the SPY, this is what you have inside the SPY. The SPY, we're at 199.02. We got to 195. Well, we started at that 199.02. We got to the 195 level. But guess what, folks? We had high volume swings down there with volume. Let's say, and guess what? You're going to be right back down there. I suspect we're going to be right back down there tomorrow. Took it down, took it back up, and took it all back. The SPY, the NDX 100. What do you have with the NDX 100? Did the exact same thing. NDX 100. The high of the NDX 100 today is 105.71. When we came down, we hit 103.27. You're right back at 105.49. So bottom line, what you are going to have is it looks like that you're going to be up at these highs because we have all of 2 minutes left. So basically, they caught the market, and we'll see how this ends up shaking out. The SPY, when we take a look at the SPY, the volume characteristic still isn't there. The volume's not there in the SPY. The price, however, now has held, no doubt. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow up 349, NASDAQ up 109, S&P's up 43. We're going to be right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. So everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over in the morning. Market-wise, let's take a look at it out here. We had the Dow up 363, NASDAQ up 115, S&P's up 48. In that context, folks, this market was as wild as you can ever get it. What am I talking about here? Well, from highs to lows today inside the Dow Industrials, this is what you had. Well, this is what you had just in the past hour. Dow had hit a high of 16,666. Intraday, at the 3 o'clock, from 3 to 4, from 3 to 3:30, it went down 300 points. It came all the way back 300 points. It closed at its highs. Bottom line, you closed at a high. You have 1.1 billion versus 1.3 inside the Dow Industrials. If we go take a look at the diamonds and see how the diamonds are set up, what you have with the diamonds, so the diamonds are the ETF structure of the Dow Industrial. Diamonds go up today on 15 million versus the downdraft out here of 18 million. Inside the NDX 100, the 3 Qs. What do we have inside the 3 Qs? This is what you're looking at. 3 Qs today are trading at 105.64. You did 65 million shares. You're going into 95 million. Bottom line, it's not enough shares, folks. You know, we'll see if the Qs can make it up to. We're at 105.64, and that is a 0.618 retracement of the whole move down. We'll see whether we can get to 106.47. Today we got to 105.71. Inside the SPY, the SPY, what do you have inside the SPY? This is what you have. The SPY is trading at 199.16. We did 263 million shares versus 346. Now, what we're definitely going to also have is that you're coming into a Friday, you're coming into the weekend. The real key is going to be is that who's going to hold them, who's going to throw them out, who's going to do all of the above. Gold contract. What do we have with gold? Gold contract, folks, we do need more price spread and volume. What we did have out here today is this. You had GCC5. What we did have is that you had a test of the lows of yesterday. It tested it on lighter volume, which is a good start. Bottom line, gold is right now is trading out at 1123.40. What we did out here today is that we got to 1117, rejected it, did lighter volume. The volume characteristic out here today was 135,000 contracts. You were testing the low of yesterday that had 207,000 contracts. Bonds. Now, the bond market, folks, bottom line is saying, number one, that this market is going south once again. And my take on this, by the way, is that this is the top of the counter trend bounce that we're in, meaning in the S&P. The 30-year bond, what we did with the 30-year bond is this. 30-year bond traded down to 155.16. We're at 156.07. And what that baby had done is this. We needed the bond market. Well, the bond market will do what it wants to do. But not for bonds to go higher in the art of timing the trade is that when you come down, and you come down with any type of volume at all, you got to get under that level. It's got to reject that level. And simultaneously, you got to have lighter volume. Now, the bonds did all of that. Today, we did 449,000 contracts. We got under the 155.13 level. We went to 155.16. You closed at 156.07. That means you tested it, it held. Now what are you going to be looking for? Now you're looking for wider price spread, accelerated volume on the way up. We take a look at the dollar index. What the dollar index has done is this. Dollar index is at 95.70 And it tested the downdraft that was created out here on the 21st of August. We did that with 54,000 contracts versus 61. So the dollar index is saying it wants to go back down into these 92.52 area. See, the way the dollar index also took out the swing point of 93.30 is telling me that, guess what? This thing wants to go lower, but particularly a lot lower. Now, let's go back to the broad market for a second, because the broad market, folks, no doubt, is not only a trip, it's quite extraordinary about how we went higher, lower, and all of the above. I'm going to put up a intraday chart for you so you can see how this was shaking out today. So what we have is this. If I put a 2-day chart up, what you're going to see, actually, I'll put a 1-day. It's easier if I look at the futures. So what you had is this. Futures high up here today was 1988. Well, we're at 1986, so we closed at the highs. At 3 o'clock, well, we stayed up at highs for a bit. At 3 o'clock, it dove down. It dives down into 1944. That's like insanity. And it has volume at the lows. What does that mean? Well, volume at the lows, even intraday, means, hey, we're going to be right back down there. So it's going to be so intriguing here, of course, is that how do we come in to Friday after this week? Because, of course, this week, if we take a look at where we are and where we've been, okay, it's about as dramatic as you can get, because we're at Thursday, right? So if we go back, Monday, the Dow was at 16,300. Got down to 15,900. Comes back to 300, gets back down to 15,666. Now you're back up into the 16,000 level. And if we just bring this back to last Thursday, what you're going to see is that you're right where the largest part of the downdraft actually occurred. Now, what you're going to hear on stations, some stations for sure, you'll hear that some of these stocks are up 20 or 30%. Folks, they're not up 20 or 30%, okay? That number, where that number is coming from, I'll show you where that number is coming from. If we take a look at the Qs, the Qs have a low in that, yeah, maybe 1 share, 10 shares traded at $84.74. That was the open. I saw that at the open. The open was down $14. No one got that price, folks. That was a mispricing, not necessarily mispricing, because the price is the price. That was the market hitting stops. No one got those prices. Okay, so that Q certainly didn't go from 84 to 105. The actual price that anyone could get it, or that it actually traded really at, with, you know, let's say where it's 1,000 shares or whatever, was actually $96.94. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 369 rather. NASDAQ up 115. S&P's up 51. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 369, Nasdaq up 115, S&P's up 51. And as we do each and every Thursday at 20 past the second hour, we have our man, Mr. Basil Chapman. Don't forget, folks, every trading day right here at TFNN, 10 to 11 Eastern Standard Time. Outstanding show. I'm Mr. Basil Chapman. You can get it right on your cell phone. 11 to 12. I'm on 10 to 11. You can get it 11 to 12 right on your cell phone. TFNN.mobi. Now, you also get a great newsletter, the opening call. The way you get that, go to TFNN, go to newsletters, go to trading newsletters. You can test drive that 1 month absolutely free. Basil Chapman, what's going on?
Hi, Tom. How are you?
I'm doing great. You having a good day?
Very good. Thank you very much.
Cool, man. So what are we going to look at?
Well, I just wanted to show the Dow chart, and it's really important right at this stage. I thought I would show what I sent subscribers this morning. This is actually, I've already started tomorrow's notation here for my opening call subscribers. And what I discussed here is what I've been talking about for about 2 days, that there's a chance that we're going to match the takeoff, I call it the takeoff phase, that we had back in October the 15th of 2015 when the Dow was at 15,855. Let me show you what I was looking at. This is a little squashed. I'm going to show you a bigger chart in a moment. But that low bar came in and had the pattern that I call the Chapman Wave Roman candle. That's where it opens at a certain point. And immediately goes down really sharply and then comes back and closes at about halfway. If that wick isn't completely filled, it can often move to the upside very quickly. So what happened is on the October the 15th of 2014, the Dow went to 15,855. The very next day was an inside day with a little doji candle. The second day after the low was a very sharp breakout day. And then it went immediately to the 9-period moving average and it started going higher. So we switched from all our short positions, and we had some real nice gains, a 28% gain. We had one position. You remember we were looking at the SOX, the SOXS, the short 300% short the semiconductor index. We finally took profits in the remaining portion for about 100% gain.
Nice.
So we switched, and what I did is I switched on Tuesday to the 300% long the Dow, and it got stopped out for a small loss, and we did it again yesterday and got stopped out. It was so frustrating, and then that went from the 52s all the way to the 57s. However, I just wanted to show you a chart before I show you something else, and that is, you see this, I'm talking about that construction over there that we've just made with today's closing near the high, yesterday closing near the high, and today. There's the 9-period moving average, so we went slightly above it. This is leg A. Now you can see all of these moves, when you've had these very big candles from the bottom, it actually takes you quite a bit higher. It can actually start a brand new buy signal to buy mode. I happen to not be in that category because of the monthly charts that look so terrible and some of the sectors that got hit so badly. And this, I can go through all these different reversal patterns. So I just wanted to show you that there was a chance that the Dow might have made maybe not just a short-term low, it could go higher. So it's really important that you don't get the pattern that I call the single leg A failure syndrome. And that means from an identifiable low, there's a sudden, very sharp spike to the upside, and then all of a sudden it gives back a huge chunk of the gain. If the Dow gives back 60% of this rally from the low of 15,370 that was made on Monday, the 27th, that'll start to say, uh-oh, you're just making a whole series of arch formations and you could fail. So in frustration, I went through all these charts. I went through a lot of charts last night. I looked at the commodity index, a number of things. And what I did decide was that we would go long. And I sent out an email. I sent out my opening call, Traders Call, and I sent out a chart just before the opening. And we were able to get it. So we went long. And I'm showing this only because of all the different techniques that were involved. We went long Freeport McMoran, and I've had people calling for months, and I said, this is just one horrible chart. Look at the monthly. I said, I don't know if it's going to stop until it gets back to the 5.74 low that was made in December of 2008. So all of a sudden, I started to see some improvement, and this is really early. This is the first time, and in the weekly chart, there's what I call a declining wedge formation.
Okay.
So it still has a long way to go, but you can see that the stochastic did start flattening out. MACD started to improve, and I think we're going to have what I call a high volume low bar coincidence, and that means that as folks were really giving up on FCX, Freeport McMoran, there were a lot of technical things that said, hey, this is time that there could be a bounce. At least at this particular point, you can see this is such an interesting chart. I spent a long time last night on this. Not once since June the 24th has this stock even spiked above the 9-period moving average, let alone close above it. And look at this candle today. There's a gap up. The gap up's very important because what it says is if it breaks back underneath the 9-period moving average and goes below 920, that could very well have a retest of the bottom. So this candle is going to be really important to have follow through to the upside. So usually you don't get the very first break of a 9-period moving average starting a big move. But there are a lot of things that came into play right here. The MACD, the moving average convergence divergence, is moving higher. The stochastic was giving a positive divergence between the low that was made back here, and you see that the stochastic was actually rising into this low bar right there. So there are a number of factors. So a 25% gain is nothing to sneeze at. But believe me, this is just the first attempt. So we're going to be looking at this very carefully. We do own it, and I think that we're going to be watching it closely. Why? Because this has to do with, it does have to do with copper. I'm not sure that this is moving just on copper alone, because copper today had leg B. So this is the start of some kind of a turnaround. You can see copper also.
They're the largest copper, gold, and one of the largest oil companies in the world. All three.
All three. So if anything's going to happen positively, perhaps this is the stock that might continue high. It's got a long way to go to the weekly 9-period moving average of 12.56. But I was determined that somehow we had to make up for that, the miss that we had of a fabulous move in the Dow. So this one has kind of more than made up for it, but it's just one move, and I'm looking to see how it bases out. It is really nice that it closed near the high, because what it's saying is that the buyers, these weren't this wasn't just short covering. It looked to me like there was actually buyers coming in just from the trades that went through. It's a little difficult to say. I mean, I don't know how you can exactly gauge that. I do it by big blocks and stuff like that. But most importantly, if in fact it can tackle, this bar looked very good. I remember being on air in my show, my 11 o'clock Tiger Technicians Hour.
Yes.
And I had a call and I said, no, I wouldn't touch it yet. This is a good sign. And this candle can turn out to be an engulfing candle. It could be very positive. But a candle means nothing until the very following candle. The next candle is the one that gives you the proof of whether it's constructive positively or it's negative. And this one said, uh-oh, big mistake, this is negative. So I hope this works out. We'll see what happens.
And folks, you can test drive his newsletter right now. Go to TFNN, go to newsletters, trading newsletters, and of course, don't forget, tomorrow morning, 11 o'clock, right here at TFNN. Get it right on your cell phone, tfnn.mobi. Basil, you have a great night, safe night. We look forward to a show tomorrow.
Thank you very much,
okay,
Tom.
man.
You too.
Have a great one. You stay right there, folks. So come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Autodesk, ADSK. Let's take a look at Autodesk. They just come out with numbers. So Autodesk closed. So Autodesk, folks, it's a software. They supply software and multimedia tools. The low for the year is 46. The high is 65. It's traded at 50. Right now, it's trading at 46. Numbers go like this. Let's see what they have to say. So Autodesk reported second quarter fiscal loss of $235 million after reporting a profit in the same period last year. The company said it lost $1.04 a share. The results beat the expectations. I guess they were expected to lose more. The average estimate of 10 analysts was for earnings of 17 cents. They posted revenue of $609 million. They didn't beat anything. The expected revenue is 213. So bottom line is that what you do have with Autodesk, what it looks like it's going to do, it's going after a B point of an ABC structure on the way down. If you take a look at this, what Autodesk has, well, last 6 months, it's been down from 65. You had a spike low out here on the 24th, 46.77. It's going to go after that tomorrow. Let's go to Sandy in Boston. Hey, Sandy, what's going on? Okay, Sandy wanted to look at Amazon. If we take a look at Amazon, I wouldn't be buying Amazon out here, folks. This is like a lot of the other equities right now. You came down, you were fast, you're furious, all of the above. You're up $17 today, so let's check it out. Amazon's trading at $518.37. This is what Amazon's done. Amazon last Thursday, Tuesday rather, was at price point right where it's at, well, $533. You're at $533. You come off $533. First day you do $6.7 million. Hit a low at $10 million. We just bounced back with $6 million. Bottom line, what that at least sets up as a consolidation. When you have, and many of these folks will probably consolidate out like this. They're going to come back and they're going to test those low swing points that are down there with juice. That's how this thing sets up. We go take a look at the Smith & Wesson. Let's see, SWHC, Smith & Wesson just come out with numbers. Let's see what they're saying. Smith & Wesson closed at $16.22. That had been up $27. It's trading right now up $1. And numbers go like this on Smith & Wesson. The estimate was $1.06. They made, well, here, one second. No. The estimate was 32 cents. And what did they make? Okay. Well, here, let's do the sales first. Sales estimate. Okay, sales estimate was $143 million. They did $147.8, so they basically beat that. The year-end adjustment, they were expecting $1.06. Now they're saying they're going to do from $1.14 to $1.19. That's how that baby is also shaken out. We go take a look at GameStop, GME. GME closed out at a price point of $46.20. That's trading up $1.20 right now at $47.50. Numbers go like this on GameStop. The earnings per share were 31 cents. The sales were up 8.1%. So they beat pretty handily too, by the way. The estimate was 24 cents. They took on 31. Revenue, I'll beat that too. Look at that revenue. That's pretty amazing, actually. The revenue, folks. Where is she? There she is, right there. Revenue was the expected revenue was 1.73. They took in 1.76. Let's go to Kevin in Orlando. Hey, Kevin, what's going on?
Hey, Tom, can I give a growl?
Absolutely, man.
Wow!
There you go, brother.
I had to do it, my man. Let me reset this. 2 days ago, I called, and I asked you about FCX.
Yep.
And I said, man, it was trading around 860. And you said, this thing can get down to around 770 to 780. And so yesterday I bid at 790. Look what it did today. Look at the volume, and look what it's doing in after hours.
Yeah, so the after hours, what's going on with the after hours is this. It closed at $10.19. It was up $2.22. It's trading at $12.05 right now, folks. And what that's all about is Carl Icahn took a 8.46% position inside Freeport McMoran. He disclosed it after the close out here today. So
I was tempted to sell it today because you 20-25% profit in a day. But I looked at that volume and I said, maybe we'll get a little jump at the open tomorrow. And then after hours, it was just a pleasant surprise.
No doubt. And
where do you think this thing can go to now?
Okay, so you have. Let's put this back. Well, 12.17 is where the juice is going to come in. 12.17 to $16. That's where it got taken apart. July. That was just in 1 week. So when you look at that, it came down. Came down 33% in 1 week. So that's where you're going to get the flack. What I would do right now, I would sell half of that right into it, man. You can't.
Yeah, that's what I was thinking. And Dave, 4 points in over a 2-day period.
It's unheard of. You got it. Exactly. Exactly. And,
all right, I just wanted to say I appreciated that, man. I took your advice on that and jumped on it when it came down like it did.
No, that's a beautiful thing, brother.
Have a good one, Tom.
Okay, man. Have a great one. So 8.46%. That's quite. And so this is what you also have here. Now watch how this shakes out, folks. So you had the stock move like this, right? You had Kyle Icahn come into it. I suspect if I bring up options, you're going to hear about this tomorrow morning. More than likely, what you're going to see is bottom line is that someone also knew and was in the option market. Well, here, 1 second. I'll be able to pull something up right now. There it is. No, that's the 8 puts. So that's not it. No, this probably was pretty quiet because guess what? On the put side, they were on the put side. 13,000 contracts got traded at the $8 put today. And there's nothing unusual here on the call side right now at all. Okay, at all. Okay, so with Freeport-McMoRan, now what's also happening is that you have a 6% short position in it. Now, that's a high short position, folks, in the context that I can't understand why someone would still short the stock when the stock had just gone from $40 down to $10. But unfortunately, someone didn't close out their short. They're going to close that out now. They'll probably still make money, but bottom line is that's going to be a lot less money. So there's no doubt going to be action, or there is action in that right now. What you will get there, okay, is, well, here, let's watch this, because you know what's going to get interesting here? Now watch this. This is going to get pretty wild, actually, because this was coming into the low of 2008, and the volume was lighter, but now what you're going to have, 738 million. Yeah, it still should be lighter. It still should be lighter, because what you have is that you have, it's coming into 1.3 billion and 840 million. It's going to be a close call about the 840 million, because what you very well may have now is that tomorrow, bottom line is that you're going to have some monster volume, like as we had today. Now, what that's going to do is that that's going to juice the monthly volume on FCX. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 369. NASDAQ up $1.15. S&P's up 50. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply.
Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Don't forget, folks, every Tuesday, Thursday, right after my show, you get our man, Mr. Andy Hecht. Right here, 5 to 6 Eastern Standard Time. You get all that programming right on your cell phone. TFNN.mobi gets to the audio. You want Tiger TV, just go to TFNN.com. Right-hand side, you see a little box with devices. Hit it, and your servers will know exactly what type of device you're on. Let's go to Pat in Tampa, Florida. Hey, Pat, what's going on?
How you doing, Tom?
I'm doing great, man. You having a good day out there?
I'll tell you what, love your show.
Thank you, man. Appreciate it.
You got it. I was hearing earlier today that you thought the market was going down.
No, I said the market was topping. And, you know,
I'm sorry?
So my take is that the market topped at 11 today and at the close, yes.
Okay. So where do you think it's going next? That's all.
Oh, yeah, no, I think it's going down.
Okay.
You know, so let's walk through this, okay? So the correlation inside a bounce like this, you know, I can bring you back, in fact, maybe I could bring you back to 2007 right now. This fastness of the move, no doubt, was pretty amazing, okay? I've been in some fast markets. This move down was extraordinary. The SPY, you know, if we go back, you know, basically 8 days ago, the SPY's at 210. We're at 199, and, you know, that tick at 182 wasn't real anyway. You know, what was real, folks, is like 197. Now, let me just see this again. I get
that.
You see what I'm saying? Which is pretty wild about this.
No, I definitely get that.
Okay. So what you had is that you had a market that goes south very quickly, has high volume, has all of the above. Then what you also have is this, and this is what's pretty neat, okay? Intraday out here today, what you had is that when we gave it up at 3 o'clock, we also had high volume at the lows. That's saying to me that, guess what? You're going to be right back down there.
No, but I mean, it rose up a little bit today, Tom.
No, it went up more than a little bit. It went
kind of strong.
It went up. I mean, the Dow was up 2.2, the Nasdaq was up 2.4, and the S&Ps are up 2.4.
At the end of the day.
Yeah.
That's all I'm saying.
Right. Okay. Have a great one, man. Have a safe one. Let's go to Bill in Boca Raton. Hey, Bill, what's going on?
Tom, thank you for taking my call.
Sure. Thanks for calling, man.
I'm curious. I've been in LNG for quite a while, and I keep selling covered calls, so I'm covered with the downside on that, and I still think it's a good company to be invested in. But WMB, there's a company looking to buy it out, and I'm just wondering whether I don't want to keep all my eggs in one basket like pipelines or energy. So the question is, do I switch over from LNG to WMB?
So let's take a look.
Or don't do anything.
Well, you got WMB. WMB is the Williams company. It's infrastructure, connecting North America. So what is a pipeline company? Yeah? Okay, natural gas pipeline. Okay. Yeah, I see it. Okay. So the low is 40, the high 61. You're at 47.68. Bring this back. So it's off the highs of 60. Oh, and you get a consolidation. Interesting. Okay. Okay, so walk me through how you trade this now. Because this does have a high volume swing high. So this wants to go to 61. That's how this is set up.
That was based on, that was the day they announced that this other company, I think it's Energy Partners, I forget which one it is, but the other one of their competitors wants to buy them out.
Okay,
and that's what spiked that up.
Okay, so check this out. This is that happens, and it happens a lot, folks. Well, when you get a high volume swing high, that means you're going to go back there. Now, what the problem is that you don't know when you're going to go back there until what you do is that on a consolidation, when you test the bottom of the consolidation, it's going to give you the next piece of information. Now, what's so cool about this equity is that, watch this, what it's done. This is a trip, man. So if you take a look at the bar from December of 2014, right? The low of that bar is $41.21. The volume is 242 million, okay? We've only done 151 million this month. That's the decent indication that, guess what? Your low of this consolidation is going to hold big time, and your odds are you're going to be at your highs versus that low. That's kind of neat, because I think we only got, today's the 27th, 28th, 30 days. So is it Monday or Tuesday? That's the September 1st. There's only like 2 more trading days left. This is doing 12 million, averaging 12, 13 million a day. That would give you 175 million versus 242. It looks to me like, that baby has tested the lows. Let me put it on a weekly now for a second.
I think the monthly even looks great.
It is. That's why I just did the monthly. The monthly looks dynamite.
Okay.
Yeah, that's my point. The monthly really looks great. The monthly is saying that, hey, guess what? You get action, man.
Yeah. And you can sit back and enjoy the dividend at the same time.
And the dividend on this baby, yes, 4.95.
Yep.
So. Cooking.
Thank you, Tom.
Okay, man. Have a great one. Have a safe one. 877-927-6648. Would you want to be watching out here tomorrow morning in a big way, folks? Is the bond market. The 30-year bond out here today, what it did is that it tested its lows, it rejected its lows, it had lighter volume. That's saying bonds want to go topside once again. You said bonds want to go topside once again. What that sets up is that markets want to go down. Now, what you also have is this, is that I heard this earlier, and I got to check it out, but on CNBC, Bob Pisani, I was at a meeting, I was in my car for a bit this afternoon, and what he was bringing up is that he said that the ARMs, yeah, that's right, look at it, it was a low of 0.18. Okay, so at the point Bob was bringing it up, he said that the ARMs is a 0.027. And he said that he had spoken with Dick Arms, who is the inventor of the ARMS index, okay? And what he had told him is that he had never seen it that low. Let me just walk you through what that means, folks. The ARMS and a tick, down tick or up tick, is something that I use at extremes in the marketplace, right? The ARMS means, okay, when the ARMS is at 1, it means that everyone's getting about the same amount of business inside the New York Stock Exchange, buying and selling. Okay, that's what that means. It's a equilibrium inside the marketplace. When we hit lows in 2008, and the turn was coming, that ARMS was running at 9, okay, which is just about unheard of. Bottom line, what that meant at that point is that the flush out to the downward side, that meant everyone was actually selling the exact same stocks at the exact same time, the exact same day. That's what that means, okay? Didn't have to be the exact same time. It would be within that 6.5-hour time frame. But realistically, it's going to be very close to the same time because that's how the ARMS is generated, whether it's higher or lower, okay? So when you get that, what does that mean? That means that everyone is out of their stocks. And what always happens inside the marketplace is that people always own the same stocks. That's where the final flush comes, okay? So now watch what 0.18 would mean. What that means is that as the market's going higher, guess what? This wasn't an even market coming across. Everyone was buying the exact same stock. And what does that mean? Well, that means, folks, that everyone's into the same stock. Now, who are they going to sell it to? What does that mean? That means you're going to have a pullback. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow up 269, NASDAQ up 115.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Welcome back, folks. And you know what I do want to bring up, I'm just going to show you something here in 2008, because it's important to wrap your head around this, folks. Okay, 2008, before we basically went south. When we came down in 2008, you know, if we look at January of 2008, the Dow's trading at 12,900. 5 days later, it's at 11,600, so 900 points. Not, you know. This time we went down 1,000. But guess what? 9 days later, you're all the way back up to 12,700 again. And now if I'll move this just a little for you just so you can see this correlation. And we move that. I'm going to move it to May. And we move it to September, October. What you're going to see is that's the next leg. We went sideways. Then the bottom line is that you're down into a price point of 10,300. And as you move this forward, of course, what ends up happening, it just gets more severe. So the bottom line is that counter trend bounces are in the marketplace. This is about as good as you can get for a counter trend bounce. If you do take a look, what's going to be intriguing out here tomorrow morning is this. The NDX 100, this is a 0.618 retracement of the move. Now, what does happen when a 0.618 retracement, that is a powerful retracement move. I mean, it's 0.76 retracement. That's a powerful retracement move. So we'll see how we back down. It certainly doesn't have the juice, not even close either. And what has happened, it's coming right up into, we're at 105.64. The first leg down was 107.07, which is, we'll see where they get there. I don't expect we're going to get there tomorrow morning at all. What I expect you're going to see out here tomorrow, and by the way, it's going to be hard to do this, but this is what I expect, because you had Europe up today, 3.9%. The CAT was up. The DAX was up 3. FTSE was up 3.5. Our markets, Dow was up 2.2. S&P's 2.4. NASDAQ 2.4. Overseas was up. You're coming into a Friday. Bottom line, there's going to be a lot of choices that are made out here in the marketplace tomorrow. And what I expect now, and you have window dressing that's starting. That's what's also happening tomorrow. So everything is in place for a higher market. There's no two ways about that. We'll see where this baby shakes out. And what I expect is that you're not going to have a higher market, because what you're going to have is that you're going to have the severity of the downdraft in. You're going to have plenty of folks that actually have been in this market for a while and say, okay, I'm not going to go through this downdraft once again. What I'm going to do, the orders are actually in, and there's going to be orders that are getting executed out there, sell orders that are getting executed tomorrow. What is intriguing is that today this was on CNBC. This was reported on CNBC that the amount of money that was going into the emerging markets had never been so big. Well, I guess somehow they must have forgot to base, and that very well could have happened. They might have get that information, whether it's yesterday or today or whatever, and that very well could have been. But guess what? The statistic, and you can pull this up, folks, the statistic inside the emerging market is that $2.7 billion was pulled out of the market as of August 24th. What the statistic also is, that matches September 17th of 2008 when Lehman Brothers went under. So the bottom line is that you're going to hear a lot of numbers out here, and that's what Google's for, folks. When you hear those numbers, Google it, okay? That's what I did this afternoon when I heard this number, because the number actually didn't make sense to me, that the emerging market, the first time it was up was last night. I think things have been getting killed. So the bottom line is that, yeah, we'll see where it shakes out. You stay right there. I'm Mr. Andy Hex. Coming up next, going to be growling a problem with you. If you happen to be in your car and we're not on the station you're listening to, remember, TFNN.mobi. You can get us 24 hours a day. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one. Have a safe one. Stay right there, folks. Andy's coming right up. Go get him, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
This is TFNN.